this video, I'm going to make my case for why I think Upwork stock is an excellent and undervalued growth stock you can buy before 2025. I'm going to share with you the company's revenue growth, its cash flow, its operating profit margin expansion, the return on invested capital. And then finally, I'm also going to share with you the valuation, the forward price to earnings multiple, and the discounted cash flow model to highlight all the reasons why I like this gig economy stock heading into 2025. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So let's start with revenue growth. And you'll notice a decelerating revenue growth for Upwork at 10% in the latest quarter. Now, during the pandemic days, the company benefited as people were more willing to work remotely, especially those that were perhaps sent home from their regular jobs as theme park attendants, as workers at movie theaters, waiters, waitresses at restaurants that were shut down, etc. All those in-person jobs, the people that were sent home and let go or temporarily laid off, all of a sudden had more time on their hands. They were staying home a lot more often, and they were willing to do some of these jobs that were posted on Upwork's platform. And so the company benefited significantly. Revenue growth surged. And then as economies reopened, you see this slowdown here because of the change in the dynamic in how people work. Theme parks reopened, restaurants reopened, and they started calling back workers. And not only that, they started offering workers huge incentives to come back to work, offering them increases in hourly wages, benefits for signing up and staying on. And so as people went back to work in person, that limited the amount of time they had to work online. And then businesses, of course, were looking for more in-person workers, so they weren't going on the Upwork platform. So both sides of their equation, remember, this is just a platform that brings together buyers of services and sellers of services. It's just a platform business model, which I love, by the way. I love the platform business model that Upwork employs. And so they had that bit of a decrease there. Longer term, however, I fully expect Upwork to continue delivering excellent revenue growth, not explosive revenue growth, but solid revenue growth in the low double digits or high single digits for maybe even as long as 2 decades, as the transition to working with contract work, working online, working remotely is incredibly more popular. You can see these companies like Amazon that are calling workers back to the office and not allowing workers to work from home even for 1 day out of the week. They're getting huge backlash. Workers are pushing back. People don't want to go back to the office when they know they can do that job from home and they don't have to commute depending on the city. I'm in Los Angeles here. Try getting to work at 7 a.m. or 8 a.m. in the morning here. It's brutal. And try coming home at 3, 4, 5, 6, 7 p.m. Brutal again. No matter where you work, unless you're working down the street, it's going to take you an hour, maybe an hour and a half, sometimes 2 hours to get to work, and then another 2 hours to get home from work. So if you're working an 8-hour day, you could be spending 2 to 4 hours commuting. That's brutal. Why would an employee want to do that? There isn't enough advantage to going into the office. Now, the business can say, well, we work better when people come into the office. Yes, okay, I agree with that. I agree that everything would be better, work would be better if everybody was in the office simultaneously, right? But how much better? Enough to justify the huge cost of bringing everybody into the office? I don't think so. I don't think it's anywhere near enough to justify bringing everybody into the office. Now, these are for jobs that can be done both remotely and in person. Those jobs are the ones I'm talking about. Yes, I agree. There's a benefit to having everybody collaborating in person simultaneously at the office. But the huge cost of bringing all of those people into the office for both sides, for both the company with the office expense and the individuals for the commuting and all the extra cost for coming into the office, the opportunity cost, the inconvenience, all of that, the benefits are nowhere near, in my opinion, enough to offset that bringing people into the office. Still, companies are trying to push employees to do that, partly because they've already paid for the office space, partly because I think they want to encourage people to quit or resign or want an excuse to fire people. They first force them to come into the office and say, if you don't show up, we're going to fire you. That allows them an excuse to let go of some people. So there's a lot of motivations behind forcing people to come back to the office. And I don't think the primary reason is because of the increasing effectiveness of everybody working together simultaneously. And so that tailwind, that effectiveness, that efficiency, I think longer term will push more individuals to work remotely and will push more enterprises to hire people remotely. And the enterprises that don't do that, they're going to be left behind. They're going to be at a competitive disadvantage because they have to pay for the office space. They have to pay for all the computing work. They have to pay for maintenance. They have to pay for air conditioning or heating, depending on the time of the year. Whereas another business that's hiring remotely doesn't have to pay for all of those expenses. And sure, they might experience a slight decrease in productivity, but it's not going to be to the degree that will offset the advantages of having all of that remote work. So I think longer term, there will be a strong transition to remote work because the companies that don't do it, they're going to be left behind. They're going to be at a competitive disadvantage and they'll slowly shrink while the companies that employ more remote workers will grow in size and grow and take a larger market share in the economy. Already, Upwork's cash flow from operations is improving significantly to 18%, up from a little over 5% in 2019. And the trends in the market suggest that these things will continue. Fiverr, which is another gig economy platform, they've been increasing the fees they charge on the platform, and Upwork has been increasing the fees. So they're both increasing fees. They're not competing with each other, lowering fees, which is good for investors and good for the company's margins, as you see here, as well as the operating margin, as you see here, up to 8% from negative 16% in 2022. So now that we looked at the characteristics of the business and why I'm bullish on the revenue growth over the long term, let's look at valuation. First, with the forward price to earnings ratio. So even though Upwork stock is up significantly in 2024, it's still trading at near the lowest valuation it's been trading for, going all the way back to January of 2022. It's now trading at a forward PE of 13.8, which suggests that it's undervalued with its characteristics at this valuation. I like the stock at these prices. But that's not the only way to value a stock. I've also done a discounted cash flow valuation for Upwork. And this intrinsic value, regular estimates, meaning that unadjusted estimates using the beta of 1.49, suggest that the intrinsic value per share is $18.28. The current market price is $16.58. This also suggests that it's undervalued. But if I use an adjusted valuation where I lower the beta from 1.49 to 1.25, I get an intrinsic value per share of $22 for Upwork stock, where the current market price is $16.58. So regardless of the calculation I use for valuation, I get an undervalued price for Upwork. So for all these reasons, I think Upwork is an excellent stock for investors heading into 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.